How did this real money swing trading live traded portfolio fare in the months of October and November 2023 and the years prior, as I continue to chronicle its life journey? Let's get straight to the returns for October and November 2023. I couldn't provide the October update, so we'll look at October and November together in this session. Also, I'll measure to the week boundary, being Friday, December the 1st, rather than November the 30th. My live traded US stocks portfolio outperformed by 0.68% by being up 10.46% for the 2 months compared to the S&P 500 total return index being up 9.78%. Even though small outperformances and keeping underperformances small are important, we don't manage portfolios of stocks for a month, 10 months, or 10 years. It should be more like 20 plus years. Actively investing with a stocks portfolio is an infinite game, the main objective of which is to keep playing the game and to do better than the alternatives while playing. The objective is not to keep stopping and starting because our psychology and strategy are not fit enough to last through some adverse market periods. Over the last 12 months to December 1st, 2023, my rules-based US portfolio was up 15.69%. compared to the S&P 500 total return index, which is up 14.52%, a good 12-month period for the S&P 500, but slightly better by this rules-based real money portfolio that I've managed since 2016 as an open book swing trading portfolio for my customers to learn from. That's 1.17% outperformance by this transparently managed real money portfolio. Now let's compare these two returns to a balanced fund. As in previous months, I will use the Vanguard Balanced Fund, VBIAX, which is where John Bogle, the founder of Vanguard, said for decades he had invested around half of his capital. For the 2 months of October and November, the Vanguard Balanced Fund was up 5.94%, which is 3.84% underperformance of the S&P 500 total return index and 4.52% underperformance of my US-based mechanically traded portfolio. Over the last year, the Vanguard Balanced Fund returned 8.31%. This is a 6.21% underperformance of the S&P 500 total return index and 7.38% underperformance of my US stocks mechanically traded portfolio. I remind you that I use VBIAX as a second benchmark for performance because it represents a 60% stocks, 40% bonds investing formula, which is how a massive amount of long-term money is invested for 401ks and IRAs in the United States and around the world. Next, let's look at a chart comparing the equity curves starting at the same base date on November 30, 2022, between my real money portfolio, the blue line, compared to the S&P 500 total return index, the red line, and the Vanguard Balanced Fund, the black line. The outperformance by my portfolio of the S&P 500 total return index, although minimal, can be seen by the naked eye. Over time, you want the gap to get wider between the blue line and the red line, although each will take turns of short-term outperformance. Balanced funds and target date funds, where 80% of people's money is invested for the long term for their retirement, will lag further and further behind the more time that passes. Coming back to comparing annualized returns, the S&P 500 total return index has slightly outperformed my portfolio over the last 4 years by 1.6% annualized, which I can live with, although I am confident of attaining meaningful outperformance over the long term when the two sizable mistakes I've made over the last 4 or so years are made up for by my mechanical edge going forward. How did the 60/40 Vanguard Balanced Fund, VBIAX, do? Over the 4 years, its annualized return is 6.05%, which is some 4.12% annualized worse than my portfolio. I remind you that the VBIAX Balanced Fund is not an equities-only fund. However, it is a representative benchmark for the type of returns that most non-active investors get with their long-term investments for retirement. The last metric to keep an eye on are the annualized returns since the inception of this real money live traded portfolio in January 2016, 7.9 years ago. My portfolio has achieved 11.31% annualized return over this period compared to the S&P 500 total return index, growing by 12.81% annualized. That is 1.5% outperformance of the index over my portfolio over the 7.9 years. What did the Vanguard Balanced Fund achieve over the 7.9 years? A 7.82% annualized return, which is 3.49% annualized worse than my rules-based US portfolio, which we are chronicling in this playlist. Be aware that the 3.49% outperformance of 11.31% versus 7.82% annualized over 10 years means that for every $100,000 invested, you'll make an extra $80,000 more profit. And over 20 years, it will be an additional $400,000 for every $100,000 invested. So if starting with $500,000, that'll be an additional $400,000 over 10 years and an additional $2 million in profits over 20 years. That's the power of compounding. Past performance is not a reliable indicator of future performance. Please subscribe and click the bell to get notifications of newly published videos. Until next time, I wish you consistent, objective, and peaceful trading.